One of the biggest VA loan myths is that $0 down means you can walk into a closing with no money at all. Sometimes that may be possible, but you should never assume it. There are a few VA expenses buyers need to understand before they start shopping. Let's get into it. Hi, I'm Joe Harris, and I've overseen billions of dollars in Florida loans, and I'm taking that experience today to break down how VA buyers can potentially get to $0 out of pocket. Hey, Lindsay, how's it going?
I'm good. How are you, Joe?
Good. And we're talking about one of my favorite subjects is basically how to help veteran buyers and active duty military potentially buy a house with little to no money out of pocket.
Potentially. So I absolutely love this topic as well because VA clients are the heart of Morgan Financial. So Let's jump into the first question.
Sure.
When buyers hear VA loan and 0% down, what exactly do they think that means?
Well, to them, it might mean certain things, but as a 0% down payment means that they don't have to have a down payment, okay? So a VA will allow 100% of the purchase price to be financed, as long as the borrower is eligible. In other words, they have entitlement according to their VA, and they qualify based on their income, assets, credit, and so forth.
So what does that mean, or what's the difference between no down payment and no money out of pocket?
So that's the down payment. So if there's no down payment, you still have things like closing costs, right? Escrows, prepaids. You're going to probably, it's not required, but it's very highly recommended that you do an inspection. And so there's going to be money that's outlaid in order to buy that house.
Awesome. And nobody likes surprises, right? So where do buyers usually get surprised? Is it in the beginning or closer to closing?
Well, they typically, when they talk to a loan officer and they have this idea of, oh, it's going to be no money, it's a VA loan, and they think they've been told you can just roll the closing costs into the loan, which is not entirely true, okay? So the surprise probably happens because by law, a lender has to disclose what their closing costs are going to be up front within a couple days of application. So typically that's when the surprise comes, or when they have that conversation with the loan officer and they just assumed it was zero down meant zero out of pocket.
Yeah.
So they're usually, by law, should be surprised up front. It should never be at the end.
Right. So what are some of the main costs that VA buyers might still need to plan for?
Okay. So, if you're buying a house, using your VA, after you go under contract, you're going to be expected to do inspections on that property. So things like a home inspection, if there's a well, you might want to do a well water inspection. You might do if there's a septic system, you probably want to do a septic inspection. If your inspections showed issues with roofs or other like electrical or HVAC, there might be further inspections needed. So the first thing is you're going to need to pay for inspections up front. The VA appraisal does not cover inspections, right? The VA appraisal just looks at the value, but the inspections are going to protect you from, unintended expenses down the road of things not working properly. So the first thing is don't be shocked when there's expenses associated with those inspections. Could be $1,000, could be $500. The other expense is you're going to have to put down some kind of earnest money deposit. And the earnest money deposit at contract, it really puts that contract in force because there's dollars tied to it now. So that might be 5% of the purchase price. It might be $5,000, $10,000, $20,000. And that money can potentially come back to you in the future, but you have to outlay that up front to secure the contract.
Potentially is the key word, right?
Potentially. As long as you're structured properly, and the structuring has to happen before the contract, not after.
Can you explain in plain English what cash to close means?
Cash to close, so that'd be the money you pay at closing in order to close on the property. And so if there's a down payment, that'll be due there, less any earnest money deposit you had up front. If there's going to be closing costs, which will be, the closing costs, any fees the lender charges, fees you pay to get the rate down, a discount point. Could be you're going to have to do an appraisal. That's going to cost money at closing. You're going to have governmental taxes. Things like in Florida, it's Florida documentary stamps on the mortgage. You pay the Florida intangible tax. You're going to pay prepaids and escrows. So if you close on the 10th of the month, you're going to pay the days of interest between the 10th and the end of the month in days of interest, prorated with your interest rate and your loan amount. You're going to pay things like title fees, and you're going to build your escrow account, 1 full year of insurance, right? A couple months to pad the escrow account, a couple months of taxes in there. So there's a lot of things there. And the only thing that the lender has any control over is the fees the actual lender charges. Everything else is third party. It doesn't matter which lender you go to. They're all going to be the same because the lender doesn't pick the title company. The lender doesn't choose the taxes. The lender doesn't choose the Florida intangible tax or the documentary stamps on the mortgage, those are all predetermined by governments and title companies that the seller chooses and things like that.
So good to know. I'm going to take you on a little trip down memory lane now.
Okay.
Back when you were a loan officer.
I remember these days vividly.
So fondly.
Yes.
So what was the biggest common misconception for VA buyers when you were a loan officer?
That you could just roll your closing costs into the loan. And they literally thought, and I don't blame them because I hear this all the time, but the veteran thinks that you can just, if the closing costs are $10,000 and your loan amount's $200,000, that you could just, your purchase price is $200,000, that you could just get a loan for $210,000 and come to the closing with $0 out of pocket.
Gotcha.
And I don't fault them for this because there's so much misinformation about this. You can ask veterans that have already closed and they say, yeah, I rolled my closing costs into the loan, when they actually did not.
Good to know. Were all of those costs guaranteed to come out of the buyer's pocket, or are there ways to reduce them?
Okay, so that's a good question. What I didn't say last time is that there are ways to roll it into the transaction, but you can't just automatically roll it into the loan. And so there are ways, and we'll talk about these strategies, to roll it into the transaction, and you do this through negotiating in your sales contract.
So talk to us a little bit about the seller credits piece of it. Can
Okay.
seller credits help with some of those costs?
Absolutely. So the seller, by the VA rules, is allowed to pay all normal and customary closing costs on behalf of the borrower. All right. There's a misconception. Another big misconception is that it's limited to 4% of the purchase price. That's incorrect. They can pay all normal and customary closing costs per the VA in their own guidebook. The 4% comes into place for what's called sales concessions. So you can have all normal and customary closing costs. I didn't say prepaids and escrows, but I said closing costs. In addition to that, 4% sales concessions. And sales concessions can be things like prepaids and escrows. They can also be, if the borrower needs to pay off liens or judgments in order to close and qualify, that can be included. It can be up to 4% paying debt on behalf of the borrower in order to qualify. So if they have credit card debt or something that doesn't exceed 4%, the seller can actually pay that, little known fact, in order to qualify, to make the loan work. It all happens at closing. So yes, potentially, if negotiated up front, it has to be in the sales contract, negotiated by the agents on behalf of the veteran borrower or the active duty military borrower, that you can come to closing with little to no money out of pocket.
Again, that potentially.
Potentially, because it has to be negotiated up front, and most people miss that. And while we're talking about this cash strategy, we do have a really cool resource at morganfinancial.com, and there's a link down below to this specific page. We have a readiness score. So this is a way to take, it's a short little, I don't know if it's 10 or 12 questions that will help you gauge how ready you are and help us gauge how to help you with a cash strategy to close. And this is called the VA Readiness Score we're doing through our VA Loan Command Center. So there's a link down to that below. So if there's some people out there that think they're ready or not sure if they're ready, this is a great quiz that they can take to help them along the way.
I love that. What are some of the things that determine whether or not seller credits are realistic?
Well, it has to happen in your negotiations up front. And if you're negotiating, you have to figure that in the total price, right? So this is where people get the idea that they rolled it into their loan. They kind of did, but technically they didn't. So let's say the house is $200,000. Let's use $400,000 because home prices have gone up, right? $400,000, and they need $14,000, or let's just use even numbers. So my public math is way easier here. Let's say they need $15,000 for seller credits in order to pay off some debt, maybe pay all the closing costs, prepaids, and escrows. So really, if you're offering $400,000 plus asking for $15,000, you're really offering, $385,000. So, is it realistic that they're going to sell it at that net price to the seller? I'm not sure. The seller's going to it's a negotiation, right?
Again, something you should probably talk to your lender about or your real estate agent.
You should talk to your agent and your lender about the situation to understand how much you need to ask for. So this has to be talked about. Always involve your lender, your loan officer. We would love it for you to be us. So if you need a lender in Florida for a VA loan, please reach out. The contact information is either in the comments, in the description. But your loan officer in general, you need to talk to them before you put the offer and understand how to structure the offer properly. And if your lender won't help you do that, find another lender. Again, our contact information is down below. But you need to find a lender that will help structure that deal for you, and then talk with the agent to make sure everyone's on the same page. So when you make that offer, you put your best foot forward to know, because once you've made a contract, it's hard to go back to the seller and be like, look, now we want closing costs paid. you got to negotiate that in upfront. That's key.
Can't go backwards.
It's very difficult. It's possible, but not advised.
Well, speaking of that as well, is there anything that buyers should be asking their lender before they start touring homes?
Yeah, how much are my closing costs going to be? They should really review what their purchase with this range of purchase price. What does my payment look like? What are my closing costs? Considering these types of houses, this type of taxes, insurance, because those are taxes and insurance are a big piece of the closing costs. Lenders don't have control over that. And if you have the house in mind, that helps even more because then they can run through the potential costs on that house. Did I answer that question? I don't know, but
you did.
Okay.
Yes, you did. So instead of asking, can I buy with 0% down? What's a better question to ask if you're a veteran looking to purchase right now?
I'd really look for the total strategy. What are some possible strategies we can use to reduce my cost at closing? Or I only have $5,000 to put into this transaction. What's the best way to use that money? Or how can I get into that house with as little money as possible because I really like to save the money because I anticipate renovations or I need money for my kids' college. That's the coolest thing about a VA loan is that there's options with 0% down. Now, with 0% down, there's other things to think about. Funding fees. If it's your first time usage, it's 2.15% on 0% down, 1.5% at 5% down and 1.25% at 10% down. So maybe you look at, maybe I do put some money down. Or maybe instead of putting money down, I buy down the interest rate more to have my payment lowered. There's lots of different options here, but it's best to have a strategy. And really, it's not a one-size-fits-all solution. People think it's really easy. I just go to a lender, I tell them I want no money down, and that's what I do. Well, a good lender will help you look at your entire picture, look at your debt picture, look at how much money you have to put into the transaction. Maybe it's $0. Okay, you need a solution for that. Maybe it's $20,000. Okay, maybe putting $20,000 down isn't the best solution for you. Maybe it's better to pay debt off. Maybe it's other things. But it's a whole strategy that needs to be looked at, not just one single variable.
Yeah. I love that. Have a strategy in place and then also have a backup strategy just in
backup
case.
Plan to
every
the
house
backup
is
plan.
different.
And then you go and if you need to put 0% down, now you know the offers you can make. You can't, you could go lowball them on the price, but then you're probably not going to get your closing costs paid. It's going to be a balance, right, of giving them what they want, you getting what you want in order to negotiate the perfect contract. So the lender has to be involved. The real estate agent has to understand the plan up front, and they have to go in with their best foot forward. So you got to have a plan. You got to have a strategy.
So in conclusion, last question for you. What would you say to a veteran family who's excited about using their VA loan but doesn't want to get caught off guard?
I would say make sure you're having a loan consultation with a professional who understands that they're not an order taker. You don't just go to them and say, hey, I want a VA loan. They go, okay, how much money do you make? How much? No, you want to go to someone that looks at your whole picture. So if you don't want to get caught off guard, make sure they're discussing your purchasing power, your financing options, the costs of the loan, and the process of the loan. Those 4 things are absolutely vital to understand. If they're not getting that in their loan consultation call with their loan officer, give us a call because that's what we do, and we've been doing it for 24 years here in Brevard County.
Or someone that's pushing you not to use your VA benefit because they just don't know how to structure a VA loan.
Well, that's sad. And I've heard this many times, and it makes me upset because the VA is a benefit that the veteran has that they've earned. And to take that away from them is not only unfair, it's not financially responsible. So if someone isn't giving a veteran a VA option out there. Now look, VA loan isn't the perfect loan for every situation, but it's a great loan and it's earned by the veteran, and they at least should look at the option there.
Awesome. Well, thank you so much. We appreciate you giving all the information to those veterans out there.
The big takeaway is this: $0 down is a benefit, but you still need to understand the full cash to close picture. If you're using a VA loan in Florida and want help figuring out what that could look like, contact Morgan Financial today. And if you're wondering how ready you are, take our VA Homebuyer Readiness quiz in the description below.